Well, I'm here with Mark Gellman from eXp Realty. Mark, first of all, thanks for doing this. I want to talk a lot about real estate, the market locally, nationally. First of all, just kind of tell us about the forecast coming up for 2022 in St. Louis. What's it looking like now? Is it still crazy? Is it going to get crazier? What are you seeing?
Sure. So Charlie, first off, thanks for having us. And, every year I do a forecasting. And so the forecast this year going into 2022 was, we believe interest rates are going to bump up a little bit. And actually I missed that already, even though they've fallen. But at the beginning month of January, I don't know if you noticed, but they actually went up almost 1%. So we actually hit fours. Now we're back down. But again, I do think interest rates are going to bump up, but they're still historically low. From an inventory standpoint, supply and demand, that is our biggest challenge in our market right now. So if I were to say that a balanced market, meaning it's not a buyer's market, it's not a seller's market, approximately 6 months inventory, meaning if no new homes came on the market or properties, it would take 6 months to sell through all inventory. A seller's market is 3 months inventory. A buyer's market, so back in 2008, we saw 15 months of inventory. That is how much inventory there was. Now, if you fast forward to today, we're at about 3 weeks of inventory. It is a severe seller's market. We do see no indicator going into 2022 and beyond that this is going to open up. We're seeing slight bursts in certain areas, but they're going under contract as quick as they go on the market. Multiple offers, above asking, cash offers. So our buyer agents, they're hoping there's an increase in inventory. Sellers are hoping no more inventory. But we're not seeing much increase in inventory. We don't even see it coming this year.
So Mark, I was reading this article about trends of potentially the hottest real estate markets for 2022. It was a lot of Sun Belt, Florida, North Carolina, folks potentially moving to states with no state income tax, better weather, potentially the way that COVID has changed how people live and work. Are you seeing that as well? And has St. Louis been affected by any of that also?
Sure, and I don't think St. Louis per se, the market hasn't been affected in a negative or positive way, but certainly, as you suggest, these Sun Belt areas, we are seeing Florida increases 50 to 100% we've seen over the last year to year and a half. It is one of the strongest markets right now in the United States. And as you mentioned, all of this Sun Belt. And in this COVID environment where they can work wherever they want, there's been a lot of options. We're seeing, there's also markets though, like Montana and Idaho. And I don't know if you've read, but there's been some exodus out of California into those markets. So we certainly are seeing pockets of really strong places. But the other thing that we're hearing a lot about in Florida is, yes, there's a lot of, and a lot of St. Louisans, our clients, are going to Florida, they're going to become residents. So they need the 182 days. But the rental market is so strong that when you talk to real estate professionals in Florida and Arizona and other, they're talking about the rental rates. So when we sell a house in St. Louis, unless it's an investment property, we don't really talk about the rental opportunities, but you're talking a lot about those in Florida, and those rates are going up significantly. So not only is it a great opportunity from an investment perspective, but it's a great area for taxes and other.
Historically, it seems like, and maybe this is just an old adage about how in the winter, the real estate market slows down, maybe for the holidays, everybody's with their family. And then once the weather gets going, the market heats up. But it sounds like from what you said earlier, it's already super hot.
Absolutely. And that's probably 5, 6, 10 years ago when people would focus on the spring market. But as you and I know, when we were younger, we had a lot more snow days. Although we just came off of this, so we see very little. So our weather is so mild that we're seeing homes selling all the time. People are putting them on the market. Look, relocation, there used to be an old adage, relocation would reload in the summer. But what they realized, there were a lot of these psychological studies that occurred for children, that children had a harder time relocating in the summer. They didn't know anybody, and then they had to wait. Well, now what's happening is a lot of our clients in and out of St. Louis are relocating when the times when they need to be in the market. The children are getting acclimated in the market. So we're seeing more, less cyclical where it's the summer, it's the spring market. Right now, serious buyers that are in the market to buy.
And Mark, we certainly don't want to see the market go down, but when you have all-time highs this past July and potentially growing again, if there was a skeptic out there that's just wondering, I don't know if it's fair to call it a bubble, but will this burst? Will the prices come down? It doesn't seem like that's going to happen anytime soon, but who knows? I mean, if somebody said that to you, how would you respond to that?
So you certainly don't want to say never. And we've lived through ups and downs. I believe there will be an adjustment. What that looks like, I don't know. But what I can tell you is this is definitely different than 2008. 2008, with the loans that were occurring, the weakness in equity of sellers, that really caused a problem. Going back to where we talked about the 15 months of inventory, there was a log jam. But what's happened now is there's so much equity in the market. The loans are tighter, so there's more money that needs to be down before you get a loan. There's no stated income. So the equity position of sellers or homeowners is stronger today. The supply and demand is really what's driving the market, and there's less land being developed today. There's less opportunities. And so we're just seeing less opportunities for prospective buyers to be able to buy. You would think the prices are going to come down, and I believe they will soften. But are we going to see a crash? I don't believe that's in the cards.
And it does seem like the rental market, where a lot of this property is being scooped up and then put back on the rental market. And I'm just thinking, if you're a first-time home buyer, that could be a tough spot for them. I know you guys sell a ton of houses, and I'm sure there's some first-time home buyers and maybe some people with some higher price homes. But I'm just thinking, if I had entered this market, let's say 10 years ago, it's pretty tough for somebody trying to get that first condo or that first smaller home, right?
You're exactly right. And when you mention, so there's a couple dynamics that we haven't talked about, but I will tell you one of the most probably challenging parts of this market right now is the amount of hedge funds that are in our market, institutional investors that are buying homes, cash offers, significantly over asking. They're buying them, renting them. In many cases, these rental portfolios are 600, 800, 1,000 homes in our market. They're buying 20,000, 30,000 homes nationally. They're putting these portfolios in a public. They're going to create IPOs. So we are seeing that as one of our biggest challenges right now for first-time home buyers competing against these institutional investors and hedge funds. There's no doubt about it also, as you suggest, they just don't have the equity because they didn't own something that they're upsizing to. So they're really jumping headfirst into a strong, strong market.
Mark, this is all great information. Tell us also about just yourself, your brother Neil, eXp Realty, how you got started, and what you can offer folks in the St. Louis area.
Sure, I appreciate it. So I'm a CPA, started years ago in the public accounting world. I migrated to owning a lot of properties. So I'm started as an investor. I realized that there was a weakness in the inventory for a full service real estate professional that understood real estate, investing, and others. So we migrated not only into owning a lot of properties, but we also into full service real estate. The beauty of what we do in today's market is if we interview with you to sell your home, we're going to give you a bunch of options. We're going to tell you what a wholesale price is. We'll tell you what an as-is price. If you want to renovate your home to maximize your dollars. So the experience we have has really allowed us to provide the sellers the most service. We'll sell this year approximately 1,000 homes. We have specialists in every area, every price point. We're located, we have an office in Chesterfield and we have an office in Brentwood. We handle the Highway 40 corridor, essentially from the city all the way out to Warrenton, south to northern Jefferson County and north. So we really have the whole market covered. We have a passion for buying, selling, and investing. And I appreciate you having us on. We look forward to our relationship. Anybody can give me a shout at 314-336-1991 or the Gellman And again, we're put your questions in the questions box here. We'll answer them all for you, Charlie.